Hello students, in present video I am going to explain about first problem from company accounts topic. I am taking this question from advanced accountancy subject BCom second year semester 3 Pankaj publications book. Let us see the question first. Swadeshi Limited was registered with an authorized capital of 50 lakh rupees divided into 5 lakh shares of 10 rupees each. It issued 4 lakh shares payable as under: on application 2 rupees, on allotment 3 rupees, on first call 3 rupees, on final call 2 rupees. The public applied for 3 lakh shares. These were allotted. All the money due on allotment and call was received except the first call on 10,000 shares and final call on 15,000 shares. Pass journal entries and prepare the opening balance sheet. This is the problem. Let us understand the meaning of this problem. There is one public limited company, Swadeshi Limited. They want 50 lakh rupees share capital. Means in their memorandum of association, under capital clause, they have mentioned their share capital as 50 lakh rupees. So they want to sell 5 lakh shares at the rate of 10 rupees each to public. Here, one share price is 10 rupees. No? This is known as face value of the share or par value of the share. In company's memorandum of association, they have mentioned 50 lakh rupees as their capital. No? Therefore, this 50 lakh is known as authorized capital. Company is permitted to collect 50 lakh rupees from the public. So total 5 lakh shares, company need not to sell at a time. According to its financial requirement, company issues the shares. In current year, company issued 4 lakh shares. Means 4 lakh into 10 rupees, 40 lakh rupees in current year company wants to collect. So this 40 lakh rupee capital is known as issued capital. And the public applied for 3 lakh shares. So there is under subscription here. Under subscription means what? Supply is more, demand is less. That is known as under subscription. So public applied for 3 lakh shares and the company allotted all these 3 lakh shares to them. Now 3 lakh shares into 10 rupees each, 30 lakh is known as subscribed capital. And the company doesn't collect total money at a time. So company collects in the form of installments. First installment amount is called application money. In present problem, in this 10 rupee, 2 rupees company wants to collect through applications. Second installment amount is called allotment money. So when shareholder pays this allotment money, then only company confirms their shares. So in present problem, on one share, allotment money is 3 rupees. First call amount, third installment amount 3 rupees, last installment, final call amount is 2 rupees. So total 10 rupees. So in 4 installments, company wants to collect this money from public. Means in current year, company called total 10 rupees. So 3 lakh shares at the rate of 10 rupees each, 30 lakh company called. So this 30 lakh is known as called up capital. So in this problem, subscribed capital, called up capital, both are same. How public paid? Application money, allotment money, everybody paid. In case of first call, on 10,000 shares, company failed to collect first call money. So 10,000 into 3 rupees per share, first call amount, 30,000 not came on first call. Similarly, in case of final call, on 15,000 shares, company didn't receive final call money. So final call per share is 2 rupees. No? 15,000 into 2 rupee, 30,000. So how we should understand this point? For example, two shareholders A and B. A purchased 10,000 shares. B purchased 5,000 shares. A paid application money, allotment money, and he failed to pay first call money, final call money. Similarly, B, he paid application money, allotment money, first call money, and he failed to pay final call amount to the company. So on 15,000 shares, final call money not came. On 10,000 shares, first call money not came. So 30,000 plus 30,000, 60,000 company failed to collect from public. This 60,000 is known as calls in arrears. So called up capital is 30 lakh rupees now. From called up capital, when you subtract calls in arrears, then the remaining capital is known as paid up capital. So paid up capital is 29 lakh 40,000 rupees. Here authorized capital, issued capital, subscribed capital, called up capital, paid up capital, all these are categories of capital. On categories of company share capital, I made a separate video. So video link is available in the description box. If you want to know more information about this, you can see that video. In present problem, what is asking? For all these transactions, he is asking us to write journal entries. And he is asking us to show the balance sheet with this information. First, we will see how to write the journal entries. See, first what happened? Applicants applied for 3 lakh shares. No? So first they have to pay application money. On one share, application money is 2 rupees. So 3 lakh shares into 2 rupees. Total 6 lakh rupees applicants paid to the company. Our assumption is directly applicants deposited this money in company's bank account. So there are 2 accounts here. First one, bank account. Second account, from applicants money is coming now, applicants account. Bank account is a personal account because bank means actually a particular bank name. No? For example, State Bank of India account, HDFC bank account. With the firm's name, if any account is opened, that is personal account now. So bank account is a personal account. Applicant's account, with a human being names, when you open any account, that is also a personal account. So applicant's account is also a personal account. Personal account rule, debit the receiver, credit the giver. Here, bank is receiving money from applicants now. Bank is a receiver. So first line is applicable, debit the receiver. Bank account we have to debit. Applicants, they are giving money to the company, means they are givers. Second line is applicable, credit the giver. So applicant's account we have to credit. But the problem here is applicants' names we cannot write in the books. For example, 3 lakh shares are applied by 20,000 applicants. We cannot write 20,000 names here, no? So instead of writing applicants' names, we will write only one word, that is share application account. Because they paid this amount towards application only, no? Share application account is also a personal account. So personal account is of 3 types, no? Natural personal account, artificial personal account, representative personal account. So share application account comes under representative personal account because this word is representing the names of these 20,000 applicants. So final entry is bank account debtor to share application account. How much money we are receiving? 6 lakh rupees. Here, why bank is debited? Because as per personal account rule, banker is a receiver, therefore bank account is debited. Why share application account is created? Because share application account word represents share applicants. So share applicants are giving money to the company. They are givers. So as per personal account rule, credit the giver is applicable now. That is why share application account is created. I'll give another explanation also for this share application. See, debtor is an asset. So asset shows a debit balance. Creditor is a liability. Liability shows a credit balance. Here, applicants are giving 6 lakh rupees to the company. So company is taking loan from them, means they are creditors. Creditor is a liability. Liability shows a credit balance. That is why applicant's account we are crediting. This second explanation only I will follow while explaining this problem. Because under this second method, you will understand the entries easily. So journal, serial number, because dates are not available now. Particulars, debit, credit. LF number we can ignore. So first entry is bank account debtor to share application account. Narration, on 3 lakh shares at the rate of 2 rupees each, we received application money now. Mention that being application money on 3 lakh shares at 2 rupees per share received. Now come to second entry. This application money we should transfer to share capital account, because finally from public company is going to receive 10 rupees on 3 lakh shares. So total 30 lakh rupees company is going to receive from public. This 30 lakh is what? Share capital. So finally in company's balance sheet under liability side, as a share capital, company wants to show 30 lakh rupees. In this 30 lakh, through application, how much money is coming? 6 lakh rupees. Allotment money, second amount, 9 lakh rupees. First call money, 9 lakh rupees. Final call money, 6 lakh rupees. Total 30 lakh. Instead of directly showing share capital 30 lakh rupee, step by step we have to show. Because this 30 lakh at a time company is not receiving. On installment basis company is collecting this money. So first time share capital account is to be created with 6 lakh rupees. Second time 9 lakh. Third time 9 lakh. Finally 6 lakh. Total 30 lakh. So share capital is also a liability, because from shareholders company is taking this money. So in future company should return this money to shareholders. Liability shows a credit balance, no? Means a share capital account also we have to credit. So through application, as a 6 lakh is coming, share capital is to be created with 6 lakh rupees. Then in second entry we should credit share capital account with how much amount? 6 lakh rupees. And which account we should debit? See, application money 6 lakh rupee we are transferring to share capital account. When you transfer like that, share application account will get closed, no? How we open this account? By crediting. If you want to close this, you have to debit. So we should debit share application account. So finally second entry is what? Share application account to share capital account. So second entry, share application account to share capital account. This 6 lakh rupees we are transferring to share capital now. Mention that in the narration. Being share application money on 3 lakh shares at 2 rupees per share is transferred to share capital account. So first installment amount, share application. For that, 2 entries we wrote. First entry is to receive the money. Second entry is to transfer that money to capital account. Now come to second installment, share allotment. For this also 2 entries we should write. Received entry, transfer entry. But first transfer entry we will write, then only cash received entry we will write. So for application money, first we wrote cash received entry, because we don't know how much we have to transfer to share capital. Received amount only we have to transfer, no? That is why first received entry we should write, then transfer entry. But while writing allotment entry, now we know how much money should come towards allotment. Company allotted 3 lakh shares. On one share, allotment money is 3 rupees. So 3 lakh into 3 rupee, 9 lakh rupee we should receive now. Therefore, we need not to wait till that amount is received. First we will write transfer entry. When money is coming, then we will write that received entry. What is a transfer entry? So allotment money we want to add to share capital. Share capital is a liability. Liability shows a credit balance. Therefore, like second entry, in third entry also, share capital account should be credited to share capital account. 3 lakh shares. On one share, allotment money is 3 rupees. Total 9 lakh. This allotment money from whom we should receive? From those 20,000 applicants we should receive this money. So for this 9 lakh rupee, they are debtors, because they have to pay that money to the company. Debtor is an asset. Asset shows a debit balance. Means we have to debit. So instead of writing 20,000 applicants' names on debit, we will write only one word. That is share allotment account. So like share application account, share allotment account is also a representative personal account. That account represents these 20,000 applicants. Debit is share allotment account, 9 lakh. So remember, third entry is what? Share allotment account to share capital account. Third entry, share allotment account debtor to share capital account. on 3 lakh shares at the rate of 3 rupees each, total 9 lakh rupees allotment money, no? That amount we are transferring to share capital. Mention that in the narration. Being share allotment money on 3 lakh shares at 3 rupees per share is transferred to share capital account. Now fourth entry is for receiving share allotment money. On 3 lakh shares at the rate of 3 rupees each, 9 lakh rupee applicants paid to company. Our assumption is directly they are depositing that money in company's bank account. So banker is the receiver, personal account rule, debit the receiver. Therefore, bank account we should debit. Bank account debtor to. How much money is coming from them? 9 lakh rupees. Which account we should credit? See, this 9 lakh is share allotment amount only. No? In third entry, we wrote that from 20,000 applicants, we should receive 9 lakh rupee. So applicants are debtors. And now what happened? From them, we received the amount. Means this debtor account we have to cancel now. How we create a debtors account? By debiting share allotment account. How to cancel that? By crediting. So we should credit share allotment account. Same, we created with 9 lakh. Therefore, we are cancelling that account with 9 lakh rupees only. So this is a fourth entry. Bank account debtor to share allotment account. Fourth entry, bank account debtor to share allotment account. This share allotment money 9 lakh rupee we received now. Mention that in the narration. Being allotment money on 3 lakh shares at 3 rupees per share received. So remember, for share allotment there are two entries. First transfer entry, next received entry. Now come to third installment amount, first call amount. On one share, first call amount is also 3 rupees. No? So 3 lakhs into 3 rupee, 9 lakhs should come. Like allotment money, in case of first call also, first we should write transfer entry, then we should write received entry. Because we know how much money should come. Therefore, first transfer entry only we will write. For share allotment, transfer entry is share allotment account to share capital. In the same manner, for share first call, what is the entry? Share first call account to share capital account. Why share first call account is debited? Same explanation. So 20,000 applicants should pay 9 lakh rupees to the company. To the company, these 20,000 applicants are debtors. Debtors means asset. Asset shows a debit balance. Therefore, instead of those 20,000 applicants, we wrote share first call account on debit side. And why share capital account is created? Same explanation. So share capital is a liability. Now first call money 9 lakh rupees. No? So with a 9 lakh rupee, we want to credit share capital account. Therefore, share capital account is created with a 9 lakh. So the final entry, fifth entry is share first call account to share capital account. This is the fifth entry. Share first call account debtor to share capital account. On 3 lakh shares at the rate of 3 rupees each, 9 lakh rupee should come through first call. That amount we are transferring to share capital now. Mention that in the narration. Being share first call money on 3 lakh shares at 3 rupees per share is transferred to share capital account. Sixth entry is for receiving the amount. For receiving allotment money, entries bank account to share allotment account. Similarly, for receiving first call amount, entry is bank account debtor to share first call account. But here there are call scenarios. 9 lakh rupee we cannot write. Because how much money should come? On 3 lakh shares at the rate of 3 rupees each, 9 lakh should come. But on 10,000 shares, first call money not came now. So 10,000 into 3 rupees, 30,000 is not coming. Then finally, how much amount company received? 8,70,000. So in sixth entry, we should debit and credit only 8,70,000. Observe here. In fifth entry, we are debiting first call account with 9 lakh. But in sixth entry, we are crediting first call account with 8,70,000 only. If you observe application and allotment related entries, see the application entry, we have credited application account with 6 lakh, we have debited application account with 6 lakh. Means share application account is closed. Allotment, we have debited with 9 lakh, we have credited with 9 lakh. Share allotment account is closed. But share first call account, we have debited with 9 lakh, but we have credited with only 8,70,000. So there is a debit balance of 30,000 in share first call account. So that 30,000 is what? Calls in arrears. If you observe this sixth entry, that 30,000 is not written here, no? Because as per Pankaj publications book, they are not showing calls in arrears while writing journal entries. Some authors may prefer to show calls in arrears in the books. If you want to show calls in arrears also in this entry, then how the entry will be? Bank account debtor 8,70,000 is coming. Calls in arrears account debtor 30,000 is the calls in arrears. No? Why this is debited? Because this 30,000 is not going to come from the applicants. Means this 30,000 is loss to the company. Loss, expenditure, profit, income, they come under nominal accounts. Nominal account rule, debit all expenses and losses, credit all incomes and gains. As this is loss, as per nominal account, we are debiting it. To share first call account. Now share first call account amount will be 8,70,000 plus 30,000, 9 lakh. See, what is the difference between this entry and this entry? Here, share first call account is credited with only 8,70,000. Means in share first call account, 30,000 debit balance is there. But if you observe this entry, share first call account is credited with 9 lakh. So in fifth entry, share first call account is debited with 9 lakh. In sixth entry, we are crediting that account with 9 lakh. Means share first call account is closed. And the balance in share first call account, 30,000, we are transferring to calls in arrears account. So in examination, any one of these two methods you can follow. When there are calls in arrears, without mentioning that calls in arrears in journal entry, you can write the entry. Otherwise, by clearly showing calls in arrears amount, you can write the journal entry. So as I am taking this question from Pankaj publications, I am following this entry. This is sixth entry, bank account debtor to share first call account. On 3 lakh share at the rate of 3 rupees each, 3 lakh into 3, 9 lakh rupees should come. But on 10,000 shares, first call money not came, no? So 10,000 into 3, 30,000 is not coming. Therefore, finally, first call money we received only on 2,90,000 shares. 3 lakh minus 10,000. So 2,90,000 shares into 3 rupee, 8,70,000 only we received towards first call. Mention that in the narration. Being share first call money on 2,90,000 shares at 3 rupees per share received. How this 2,90,000 is coming? 3 lakh minus 10,000. So remember, for share first call also, two entries we should write. First transfer entry, then received entry. Now come to share final call. 7th entry, 8th entry. So like 5th and 6th entries only, no? For first call what we are writing, same thing will come for final call also. So 7th entry is transfer entry. Share final call account debtor to share capital account. On 3 lakh shares at the rate of 2 rupees each, 6 lakh should come. Therefore, amount 6 lakh rupees. So 7th entry is share final call account debtor to share capital account. 7th entry, share final call account debtor to share capital account. On 3 lakh shares at the rate of 2 rupees each, 6 lakh rupees should come through final call. That amount we are transferring to share capital now. Mention that in the narration. Being share final call money on 3 lakh shares at 2 rupees per share is transferred to share capital account. Then 8th entry is like 6th entry. Bank account debtor to share final call account, amount will be on 3 lakh shares. Final call per share is 2 rupees, no? At the rate of 2 rupees each, 6 lakh should come. And on 15,000 shares, final call money not came. At the rate of 2 rupees each, 30,000. So 6 lakh minus 30,000, 5 lakh 70,000 rupees finally we received. Amount is 5 lakh 70,000. Instead of writing this entry, you can write this entry also, no? If you want to show calls in arrears also in the entry, then entry will be bank account data. Amount is 5 lakh 70,000. Calls in arrears account data 30,000. To share first call 6 lakh rupees. See here, in 7th entry we have debited share final call with a 6 lakh. Here we have credited share final call with a 6 lakh. So if you show calls in arrears also in the entry, then share final call account will get closed. Suppose without showing calls in arrears account, if you write the entry, then like first call, in final call account also there will be a debit balance of 30,000. In 7th entry, final call account is debited with a 6 lakh, but in 8th entry, final call is credited with 5 lakh 70,000 only. So there is a debit balance of 30,000 rupees, no? So here also this entry I am preferring because we are following Pankaj publications. So the final entry is 8th entry, bank account data to share final call account 5 lakh 70,000 rupees. 8th entry, final entry, bank account data to share final call account 5 lakh 70,000 rupees. Share final call 6 lakh rupees should come. On 15,000 shares, final call money not received now. Means on how many shares we received final call money? 3 lakh shares minus 15,000, 2 lakh 85,000 shares at the rate of 2 rupees each. So mention that. Being share final call money on 2 lakh 85,000 shares at 2 rupees per share received. How 2 lakh 85,000 shares are coming? 3 lakh shares minus 15,000 shares. So remember, regarding share final call also there are 2 entries. First, transfer entry, then received entry. Take a screenshot of journal. Next page. With this, journal entries are completed. Now let us see how to show this information in company's balance sheet. This is the balance sheet. Balance sheet of Swadeshi Limited as at dash. Here actually date we have to write. In question date is not given, therefore dash. Liability side amount, asset side amount. Liability side under share capital, different categories of capital we should show. First one, authorized capital. Company is authorized to issue 5 lakh shares. No? One share face value is 10 rupees. Therefore 5 lakh shares into 10 rupees each, 50 lakh is authorized capital. Next one, issued capital. In current year, company issued 4 lakh shares. Face value of each share is 10 rupees. No? 4 lakh into 10 rupee, 40 lakh rupees is issued capital. Third one, subscribed capital. So in current year, public applied for 3 lakh shares. Therefore, subscribed capital is 3 lakh shares at the rate of 10 rupees each, 30 lakh. Next, called up and paid up capital. See, authorized capital, issued capital, subscribed capital separately we should show. But called up and paid up capital combinedly we have to show. Company called total 10 rupees now. Therefore, called up capital is 3 lakh into 10 rupees, 30 lakh. But paid up capital is not 30 lakh because calls in arrear is there. 3 lakh shares of 10 rupees each, 10 rupees called up. So called up capital is 30 lakh, show in inner column. From that, if you subtract calls in arrears, then paid up capital will come. Calls in arrears. First call On 1 share, first call amount is 3 rupees. On 10,000 shares, first call money not came. Therefore, 10,000 into 3 rupees each, 30,000 is the call scenario for first call. Final call. On 1 share, final call amount is 2 rupees. On 15,000 shares, final call money not came. 15,000 into 2 rupee, 30,000 is the call scenario for final call. So first call scenario amount 30,000 plus final call scenario amount 30,000. Total 60,000 is the call scenarios amount. So from called up capital 30 lakh, if you subtract this call scenario amount 60,000, then in outer column paid up capital value comes. That is 29,40,000. While calculating the total of liability side, this is a paid up capital amount only we should consider. Authorized capital amount, below to that we drew a line now. Means what? For totaling purpose, we are not considering authorized capital amount. Issued capital, subscribed capital amounts also we are not considering. That is why you have to draw lines. But paid up capital we have to consider. Therefore, this amount you have to show in outer column. And asset side. So finally, paid up capital amount 29,40,000 rupees came now. Our assumption is applicants deposited that money in our bank account. Therefore, cash at bank under asset side you have to show with 29,40,000 rupees. Finally, liability side, asset side, total is same 29,40,000. So take a screenshot of balance sheet. Continuation. So this is the end of present video. Hope this video is helpful to you. Thank you.